Hi, and welcome to One Chapter Closer, the audiobook channel that helps you experience one chapter at a time. Whether you're here to relax, learn, or enjoy great stories, you're in the right place. Let's dive into today's chapter and take one step closer to the end of the book.
The Simple Path to Wealth, a Roadmap to Financial Independence. In The Simple Path to Wealth, J.L. Collins provides a straightforward, no-nonsense guide to achieving financial independence. The book is based on a series of letters Collins wrote to his daughter, offering timeless advice on money, investing, and building wealth. The core philosophy is simple: spend less than you earn, invest the surplus, and avoid debt. By following these principles, anyone can achieve financial freedom and live a rich, fulfilling life. The foundation: avoiding debt and building money. Collins starts by emphasizing the importance of avoiding debt, which he calls the unacceptable burden. Debt, whether from credit cards, student loans, or mortgages, is a major obstacle to building wealth. It enslaves you to your income, increases stress, and limits your financial freedom. Collins advises paying off high-interest debt as quickly as possible and avoiding new debt altogether. The concept of money is central to Collins's philosophy. This is the financial cushion that allows you to say no to things you don't want to do, whether it's a job you hate or a situation that compromises your values. Money gives you the freedom to make choices based on what you want, not what you need. Collins shares personal stories of how having money allowed him to take unpaid leave, travel, and even quit jobs without fear of financial ruin. The power of investing in the stock market. Collins argues that the stock market is the most powerful wealth-building tool available. Over the long term, the market has consistently gone up, despite periodic crashes and downturns. The key to success is to stay invested through the ups and downs, avoiding the temptation to time the market or panic during downturns. Collins advocates for index funds, particularly Vanguard's Total Stock Market Index Fund, VTSAX. Index funds are low-cost, diversified, and passively managed, meaning they track the performance of the entire market rather than trying to beat it. Studies show that most actively managed funds fail to outperform the market over time, and their higher fees eat into returns. By investing in index funds, you can achieve market average returns with minimal effort and cost. The Simple Path to Wealth, 2 portfolios. Collins outlines 2 simple portfolios for building and preserving wealth. The Wealth Accumulation Portfolio. This is for those in the early stages of their financial journey, typically younger investors who are still working and saving. Collins recommends investing 100% in VTSAX. While this is an aggressive allocation, it offers the highest potential for long-term growth. The key is to stay the course, ignore market volatility, and continue investing regularly. The Wealth Preservation Portfolio. As you approach retirement or financial independence, Collins suggests adding bonds to your portfolio to reduce volatility and provide income. His recommended allocation is 75% VTSAX, 20% Vanguard Total Bond Market Index Fund, VBTLX, and 5% cash. This mix provides growth potential while smoothing out the ride during market downturns. The importance of simplicity. One of the book's central themes is the power of simplicity. Collins argues that complex investments, such as actively managed funds, individual stocks, or alternative assets, are unnecessary and often counterproductive. They come with higher fees, greater risk, and lower returns. Instead, he advocates for a simple, low-cost portfolio of index funds that can be managed with minimal effort. Collins also emphasizes the importance of asset allocation, which is the mix of stocks, bonds, and cash in your portfolio. The right allocation depends on your stage of life, risk tolerance, and financial goals. For most people, a mix of stocks and bonds is appropriate, with the percentage of bonds increasing as you get older or approach retirement. The role of bonds and cash. Bonds play a crucial role in the wealth preservation portfolio. They provide income, reduce volatility, and act as a hedge against deflation. Collins recommends VBTLX, which holds a diversified portfolio of high-quality bonds. While bonds typically offer lower returns than stocks, they provide stability and peace of mind during market downturns. Cash is also important, but Collins advises keeping only a small portion of your portfolio in cash, enough to cover emergencies and short-term expenses. He suggests holding cash in a high-yield savings account or money market fund. Target retirement funds, the simplest option. For those who want an even simpler approach, Collins recommends target retirement funds, TRFs. These are funds of funds that automatically adjust your asset allocation as you get closer to retirement. Vanguard's TRFs, for example, start with a high allocation to stocks and gradually shift to bonds as the target retirement date approaches. While TRFs have slightly higher fees than individual index funds, they offer the ultimate in simplicity and convenience. Tax-advantaged accounts, maximizing your savings. Collins also covers the importance of tax-advantaged accounts, such as 401(k), IRAs, and Roth IRAs. These accounts allow your investments to grow tax-free or tax-deferred, which can significantly boost your long-term returns. He advises maxing out contributions to these accounts, especially if your employer offers a matching contribution. For those in lower tax brackets, Collins recommends Roth IRAs, which allow you to pay taxes on your contributions now and withdraw the money tax-free in retirement. For higher earners, traditional IRAs or 401(k) may be more advantageous, as they offer an immediate tax deduction. The ugly surprise, required minimum distributions, RMDs. One potential downside of tax-advantaged accounts is required minimum distributions, RMDs, which force you to start withdrawing money from these accounts at age 70 and a half. These withdrawals are taxed as ordinary income, which can push you into a higher tax bracket. Collins advises planning ahead for RMDs, either by withdrawing money gradually before age 70 and a half or by converting traditional IRAs to Roth IRAs, which are not subject to RMDs. The psychological aspect of investing. Collins spends a significant portion of the book addressing the psychological challenges of investing. Fear and greed are the two emotions that drive most poor investment decisions. Fear causes people to panic and sell during market downturns, while greed leads them to chase hot stocks or try to time the market. The key to successful investing, Collins argues, is to stay the course. This means sticking to your investment plan, ignoring market noise, and not letting emotions dictate your decisions. He emphasizes that market crashes are a normal part of investing and that the market has always recovered over time. By staying invested, you can take advantage of the market's long-term upward trend. The big ugly event, preparing for the worst. Collins acknowledges that there is always the risk of a major market crash, such as the Great Depression or the 2008 financial crisis. However, he argues that these events are rare and that the best way to prepare for them is to have a well-diversified portfolio and a long-term perspective. Even during the Great Depression, those who stayed invested eventually recovered their losses. Collins also discusses the risk of hyperinflation, which can erode the value of your investments. While stocks are a good hedge against inflation, bonds and cash can lose value in a hyperinflationary environment. To mitigate this risk, Collins recommends holding a mix of assets, including stocks, bonds, and cash. The final word, enjoying the journey. Ultimately, the simple path to wealth is about more than just money. It's about achieving financial freedom so you can live life on your own terms. Collins encourages readers to focus on what truly matters, relationships, experiences, and personal fulfillment, rather than accumulating material possessions. By following the simple principles outlined in the book, spending less than you earn, investing the surplus, and avoiding debt, you can achieve financial independence and enjoy a rich, free life. As Collins puts it, money is a small part of life, but if your money buys you the freedom, resources, and time to explore it on your own terms. Conclusion. The Simple Path to Wealth is a practical, easy-to-follow guide to achieving financial independence. Collins's advice is rooted in simplicity, discipline, and a long-term perspective. By avoiding debt, investing in low-cost index funds, and staying the course through market ups and downs, anyone can build wealth and achieve financial freedom. Whether you're just starting out or nearing retirement, this book offers valuable insights and actionable strategies for securing your financial future.
Thank you for listening to this chapter on One Chapter Closer. Congratulations on being one step closer to completing the book. Don't forget to check out our channel for more specially curated audiobooks. If you enjoyed this, please like, share, and subscribe to stay updated on new releases. See you in the next chapter.